Welcome to this short introduction to the profit and loss statement. In the science of economy, we use a lot of different terms, and already here on the first page, you can see that profit and loss statement is mentioned, and down here we call it income statement. So that's something you will experience from time to time, that different words meaning more or less the same thing. In this case here, income statement and profit and loss statement is the same. So what is the profit and loss statement? The profit and loss statement is showing the result of a company for a period of time in opponent to the balance sheet, the other very important statement in a company financial report. So the financial report of a company consists of two main things: the profit and loss statement and the balance sheet. And there is an important difference of those two. The profit and loss statement is showing the result for a period of time. In this case here, we're doing a little bit of history going back to, let's say, 2015. So it shows all the income and all the costs related to this period of time. And when we start on a new year, all accounts, of course, are put down to zero again, and we have to start from scratch, of course. So in the new year, we again will have to make a profit and make an income and have a lot of costs. So on the contrary, the balance sheet is not showing a period of time. It's a snapshot of the economic situation of a certain point of time. Just we can compare it, let's say, with your own economy. If we say, well, we'll make an income statement or profit and loss statement for a month, then we'll take in, okay, what was our personal salary and what was our costs of, let's say, household and rent and so. And hopefully when we look at the profit and loss statement, our personal profit and loss statement for this period, we'll see that we have a small profit. That means that our salary was higher than we had cost for that period in that period. However, the balance sheet is just showing what do we have standing on our account on the bank at the end of the period. So this is what the company's balance sheet is showing, but we'll come back to that. In this session here, we will focus on the profit and loss statement. And profit and loss statement can be made in many ways. We have to in Denmark to show externally our profit and loss statement when we are a registered company. If we are a private owned company, personally private owned company, we don't have to show it, because then it's a personal matter and it's a personal economy. But if it's a public company, we have to show profit and loss statement and the balance sheet. And there are, of course, regulations on how this must be done. But even though there are regulations, we will see different types of income statements. The two main type is divided by nature or divided by function. And I'm talking about the costs here, because we can see in these two examples here that the net revenue is the same. But when we look at the costs, sales costs, other external costs, staff costs, depreciation, well, we see something else here when they are divided by function. And of course, here we can see it's divided by nature, staff, depreciation, and by function we can say, well, it's divided into distribution administration, production. But if we look at the result or the operating profit, it's the same. So it's only a question on how you divide your costs. And here we can say, well, staff costs, well, some staff will work in distribution, some staff will work in production and also in administration. So the staff cost here is divided into these functions. And you could say as a rule of thumb that normally trade companies and service company will use income statement by nature. Production companies will use income statement by function. So, but these are of course the external profit and loss statements. Internally, we are much more specific when we are showing our result, because here we have to control our different costs. Where are things going well? Where are things not going well? Where do we exceed our budgets and so on? And of course, we are not going to disclose that to the public, because these public income statements will be read by, well, everybody, perhaps also our competitors, our suppliers, our customers, and we don't want to tell all our economic secrets. So we just inform what is needed here in the rules of how to make a profit and loss statement. But of course, we want to show, and this is a must, of course, we show the right picture of the economic situation in the company. Just to talk a little bit about the income, the net revenue. It's not the same thing as, you know, what we have received in payment from our customers. It might be, but when we make the income statement, we take in the revenue when we make the sales, even though that we haven't received the money yet. So sometimes, you know, we sell our products and giving credit to our customers. So it's the point of time where we make the sales, then we will register it in our income statement, and we will match the costs which have been was necessary to make the revenue. We will match them up against the revenue, so we'll always have the correct picture of the profit made in this specific period of time. That way we can follow the development month by month or year by year to compare how is the development, the economic development of the company. Okay, so example of costs, of course, cost of goods sold, that's the variable costs. Marketing, personnel, depreciation. I have the Danish pronunciations below here. But marketing, personnel, and depreciation are fixed costs. And of course, you know the difference between variable costs and fixed costs. And maybe you also know why the knowledge of knowing the difference between variable costs and fixed costs is important. If not, we can discuss it. Okay, so we use different cost terms. Expenses, we talk about expenses when we take the obligation of purchasing. For instance, if I order, from my supplier, well, then I have taken in expenses, even though I haven't received the goods yet, or I haven't paid anything yet, but I have made the obligation to receive. I placed an order, so that's my expense. Of course, payment is when I pay for the goods. And costs here, when we talk about financial reports, costs are when the purchased items, when the purchased item is used and the value thereby evaporate. example of this is, if I pay salary to the employees in the company, well, I actually purchase labor, and when I have paid it at the end of the month, it's used, and the value of this, I cannot sell it again. I don't have a value of labor, so it's gone, it's used. And if I pay for rent, my shop is in the main street in the town, and I have rented premises, so I pay for the rent. Well, it's used when the month is ended. It's used, and I cannot call it back, so it's evaporated. I don't know. I think it's a good word to say. It's gone. The value is gone. On the contrary, if I buy a car, well, it's still in the company. The car, the value of the company. So even though that I have the car in the company and I'm using it, it still has a value. Well, then you say, well, the value of it is decreasing month after month when I use the car. And that's what we call depreciation. And that is the costs of using the car. Okay, we can discuss that further. So this is the headlines of a profit and loss statement. And the profit and loss statement is of course showing what value, economic value, the company has created during a period of time. And we make that for a year, for a month, or week, whatever we prefer to follow our actions, because this is actually showing the value creation of our actions in the company. And we can see we have our customers here think that the value that they have bought was the value of it's in 1,000 Danish kroner, so 1.1 million, and we have used costs of this value creation during that period of time, and it leaves us with a net profit here. Of course, before tax, we have to put that into consideration also, but when tax is deducted, we have net profit after tax, and that is what we can put in the pocket of the company, put it into equity, or put it as dividend to the owners of the company. Okay, I hope you enjoyed this short explanation of this vital part of managing a company to be able to make a profit and loss statement showing the value creation, the economic value creation of a period of time in the company. See you on the next session.